Okay, let's go through the important personal finance deadlines for 2025 and 2026 in Canada. And more importantly, what actually happens if you miss them. These are not just random paperwork dates. These deadlines affect your taxes, your government benefits, your grants, and sometimes your long-term wealth. So this is the kind of video where you might actually want to grab your phone and put reminders in right now. Let's start with the first big one. The RRSP deadline is March 2nd, 2026. Normally, it's March 1st, but because March 1st falls on a Sunday in 2026, it moves to Monday, March 2nd. Contributions made in the first 60 days of 2026 can still be used for your 2025 tax return. But if you contribute on March 3rd, even one day late, that contribution counts for 2026 instead. You lose the ability to use it for your 2025 income. Now, let's clarify the limits, because this is where people get confused. For the 2025 tax year, the maximum RRSP dollar limit is $32,490. That is the number that matters when you're planning a March 2026 top-up for your 2025 taxes. Your personal limit is the lesser of 18% of your 2024 earned income, or that $32,490 maximum. For example, if you earned $120,000 in 2024, 18% of that is $21,600. So even though the maximum is higher, your personal room would be $21,600, assuming you don't have unused room carried forward. And just to be clear, the $33,810 number applies to the 2026 tax year. That is not the correct number to use for a March 2026 contribution that's meant to affect 2025. Also remember, the CRA gives you a lifetime $2,000 over-contribution buffer. But anything beyond that gets hit with a 1% per month penalty until you fix it. That can quietly become expensive. Now, March 2nd is also important if you've used the Home Buyers Plan or the Lifelong Learning Plan. If you had a required repayment for 2025, it must be made by March 2nd, 2026. If you miss it, that unpaid amount gets added to your taxable income for 2025. And the RRSP room connected to that withdrawal is permanently lost. So imagine you were supposed to repay $3,000 under the Home Buyers Plan and you forget. That $3,000 gets added to your income, and you lose $3,000 of RRSP room forever. That's double damage. Next, let's talk about installments. You're required to pay income tax installments if your net tax owing is more than $3,000 for the current year, and it was also more than $3,000 in either of the 2 previous years. If you live in Quebec, that threshold is $1,800. In 2026, the installment dates are March 16th, June 15th, September 15th, and December 15th. If you underestimate and underpay, interest is charged at the prescribed rate, which is around 7% in early 2026, and it compounds daily. If the interest exceeds $1,000, an additional penalty can apply. Let's say you underpay by $10,000 and leave it outstanding for several months. Daily compounding interest adds up faster than most people expect. Overpaying just reduces your liquidity. Underpaying actually costs you money. Now we move to April 30th, 2026. This is the big one. For most Canadians, you must file and pay your 2025 taxes by April 30th, 2026. If you or your spouse carried on a business in 2025, you have until June 15th to file, but payment is still due April 30th. That means if you wait until June to deal with it and you owe money, interest starts May 1st. If you file late and owe tax, the CRA charges a 5% penalty immediately, plus 1% per full month the return is late, up to 12 months. If you've been late in any of the previous 3 years and the CRA formally demands your return, those penalties double. That means 10% right away and 2% per month, capped at 20 months. That escalates very quickly. And it's not just penalties. If you don't file, income-tested benefits like the Canada Child Benefit and the GST or HST credit stop until your return is processed. Yes, you'll eventually receive the retroactive amounts, but the interruption can create serious cash flow stress for families who rely on those monthly payments. There is one special situation. If someone passes away between November 1st, 2025 and April 30th, 2026, the filing deadline becomes 6 months after the date of death. That gives executors more time to gather records. Now, also due April 30 is Form T1135 if you hold specified foreign property with a cost greater than $100,000. If you're required to file and you don't, the penalty is $25 per day, up to $2,500. And that applies even if you don't owe any tax on those foreign assets. Let's jump to year-end. If you turn 71 in 2026, you must convert your RRSP to a RRIF, buy an annuity, or collapse it by December 31st, 2026. If you do nothing, the financial institution may deregister the RRSP, and the entire balance becomes taxable in the following year. That can create a catastrophic one-time tax bill. Now let's talk about the FHSA, because this one works differently. FHSA contribution room only starts when you open the account. If you want to generate the full $8,000 of room for 2026, you must open the account by December 31st, 2026. There is no first 60 days rule like with RRSPs. If you open it on January 2nd, 2027, you permanently lose the $8,000 room for 2026. Room can carry forward up to $8,000, and the account must be closed by the 15th anniversary of opening or by the year you turn 71. If you don't close it properly, it loses its tax-exempt status, and the fair market value becomes taxable. Now let's talk about education savings. To qualify for the Canada Education Savings Grant for 2026, contributions must be made by December 31st, 2026. The grant matches 20% of the first $2,500 contributed each year, up to $500. Unused grant room carries forward, but there are annual caps on how much you can receive in 1 year. There's also an important age rule. If certain minimum contribution conditions weren't met by the end of the year the child turned 15, they can lose eligibility for the grant at ages 16 and 17. And that lost eligibility cannot be recovered later. The Canada Learning Bond requires no personal contribution and can be claimed retroactively until the beneficiary turns 21. Just make sure the application happens before that 21st birthday. For charitable donations, if you want the tax receipt for the 2026 tax year, the donation must be made by December 31st, 2026. If you're donating publicly traded securities, start the transfer early. Brokerage transfers near year-end can take 2 to 4 weeks. If the charity receives the securities after January 1st, 2027, the receipt applies to 2027 and you lose the 2026 credit. Finally, let's talk about TFSAs. The 2026 annual TFSA limit is $7,000. If you withdraw money in 2026, that amount gets added back to your contribution room on January 1st of the following year. So if you withdraw $10,000 in July 2026, you generally cannot recontribute that same $10,000 until January 1st, 2027, unless you already have unused room available. If you recontribute too early, it becomes an excess contribution, and the CRA charges 1% per month on the excess. Let me leave you with 2 practical principles. First, treat deadlines like money. Missing one doesn't just mean a small penalty. It can mean permanently lost grant room or lost tax sheltering that you can never get back. Second, if you're unsure about your tax owing, especially if you're self-employed, make a protective payment by April 30th. Even if you file in June, paying early can prevent months of interest. Deadlines are predictable. The consequences are predictable. Mark them now, plan around them, and protect your money.